its way. So you're probably all going to be listening to me crap on, and the long's going to start. But mind you, it started ages ago. So shall we begin? I think everybody stop messaging me. Yeah, cool. Okay. So we can start with the current, or we can look at something from the past and sort of give you a bit of an idea about how it actually works and how it actually changes. But let's just start with where we are now, because that's probably what most people give a shit about, is where we are now. So you've always got to work high time frame down. Like, there's not really a lot of point being stuck just on a low time frame chart, because if you're stuck on a low time frame chart, you don't really know what's going on. You're effectively scalping within a bigger move. If you scalp in the direction of the bigger move, you're going to be really, really successful. If you fuck it up and scalp in the wrong direction for the move, you're probably going to get wiped out. That's pretty much the rule of thumb when it comes to scalping inside time frames. On my computer, this link does not work. Someone have any idea how to get Charlie Joe in here? Let's see. I just try a new link. Invite people. Okay. Right. Lego, maybe mute your, was it Lego? Lego, I don't know how to say your name, but maybe mute your mic, because there's a bit of feedback coming through. Leo Golden Mane. Oh, is that like a lion? Nice. Okay, so we'll start kind of with where we are now. So if we look at highest timeframes, weekly, to create any kind of uptrend or downtrend, you basically need to have two candles of the same type. So this is an anchor point for a downtrend, but there's nothing to anchor it to. Is why the weekly is not all that relevant right now. And anytime you've got a structural break, you've got some form of support or hold area, and it's all going to be fractal. So this is a support area. So we're basically down inside the support, but we don't actually have a weekly trend yet. Tardigrade, maybe mute your mic just to stop feedback. So we don't have a downtrend. We have got a support area. We've got another support area over here, so that's another one. And that's actually what we delved into. We broke through this, which we'll explain later. But basically, we don't really have a weekly downtrend yet, and we're running off this weekly support. And all of that is because when you look even higher, so you go 2 weeks, and you just run a little fib from here to here. Good old Alt-I, invert your chart. Like if you're struggling to tell longs from shorts and that kind of thing, just go Alt-I. What does that look like? Yellow becomes the blue when the chart's the other way, and there was our target and there was our support creation. So we went into it, we went up, we TP'd. In this case, it's not a very pleasant TP because it goes from 213 to 162, but that is effectively the short, that drove us down to where we are now. So flipping that chart around, there was your 2 week short. Longing against that was always going to be pretty dangerous. You're still going to succeed in a lot of them, but you're only going to succeed on the time frame that was generating an upwards range, and certainly the bigger time frame was trying to push price down. So we didn't really have much to go off at that point. And we don't have anything on a weekly, so let's go down to a daily. We'll go down to a daily. Now, daily, we've got a lot more structure. And we probably should have kept that weekly support marked out. So let's just put a box here. Yeah, box. Okay. So the weekly support starts from the work, and it's invalidated if the accumulation candle gets broken. So that's basically a break level. Like if we lose 155.1, this thing's going to death. Right? So you just don't want to lose 155.1. If you did, it has to find some other form of support, inside here. But that's for now, it's good. It's holding. As long as it holds and this week closes, then we get another weekly support trend, which would be something like that. Right? And it's really, really good that that wick is long, because if the wick is long on a support trend, then the next candle can't open on the wrong side of the trend, and it can't invalidate the support trend, and then you've got weekly support, forming an uptrend until you don't. Right? But for now, this is looking like a good weekly support bottom forming. So I'll just give you that trend because it's not actually valid yet. So if we were to jump down to something where we've got a bit more structure. So here we go, got a bit more structure. This was daily support from the past, and it did its job there to send price back up, but then eventually it got broken. And well, actually, technically that did break it. So this is kind of where you get a bounce, and you know that the bounce is not going to hold, because if the price had bounced. So this bounce here, that first one, that had the chance of holding because it bounced off the weekly support, but it didn't go below that. That daily support, but it didn't go below that. This one fucked it. Like when it went down like that, that was the end of it. So that could no longer offer any form of support. So if the price didn't recover and move up from there, it was never going to hold here again, and that's obviously what happened. So down she goes. So if we look at this from the other direction, you had, that was your first suppression trend. So if you're trying to work out a trend, it's always going to be accumulation to accumulation on the top side, and it's going to be distribution to distribution on the bottom, and it's always going to be wicks. The trend moves when you get a candle completely clear. The bottom of the candle has to be completely clear. So these two here, they changed the trend. This didn't. This wick's irrelevant. These two, they changed the trend. And only one of them actually changes the trend, because it's the first one. Now, when you do this, that's how you move it. So you're going from there, you're now there. So that is now the oldest suppression trend, or to keep price down, that you have on your chart. This becomes your pivot point, that becomes your next one. You've got to look really, really carefully sometimes at these things, because if even the corner is touching, like in this case, like that is not clear of the trend, so that candle is irrelevant, and you can really make mistakes, particularly if you're dealing with lower time frames, by not checking that and then assuming that that is your array of your downtrend when it's actually not. Right? So that would actually give you probably the false impression that that this is a break when it really wasn't a break, not on that time frame anyway. So that would be the array. So you're there. This candle breaks it. Now, when that candle breaks the trend, its target is going to be some form of resistance to the upside, which is exactly why I knew it was going to go to 175.1. So you mark out your resistances as they get created, and then they get targeted when trends break. So much like you have support to the downside, you have resistance to the upside. So see, don't move that. So this is basically your, oops, that's your resistance. Should use a magnet tool, go on there. So, and come across there. So that's going to be a target for that resistance. But the thing is, we're looking at a daily chart, and there's time frames above that. So if this is distribution coming down here, and this is accumulation going up here, and each one of these is a daily candle, then the thing is that itself is actually some kind of resistance on a higher time frame, because that's your up and down and break. So you can sort of get, like, unless you are looking at those higher time frames, you can kind of get caught out, because you might be trying to long to this box, but in actual fact, this is the this is resistance right here. So when this broke, it broke into resistance. So there wasn't necessarily, like, if this was your target, you missed your target and off it went to the downside, because when it broke, it actually broke into some form of higher time frame resistance. So it was basically like a daily long into a 1, 2, 3, probably like a 3-day short or something like that. But you still mark that out for the future, because from a daily perspective, it's irrelevant, as is that at 2:30. So if we array our trends, actually let's leave it there, because once, like, there's sort of levels to distribution and accumulation. So like when things are, people are still messaging me. See, can I grab an invite? Oh, they're going to think I'm a rude bastard for ignoring them. Try that one. Does work. Okay. So when you go into distribution, there's going to be several stages. So like you've almost got to break your trend several times whilst moving downwards, sideways, or sometimes upwards. That you can actually distribute upwards, and then the trend will actually truly start to reverse. So like if we leave that one on there, and then we look at that one, that is the array of this trend on the same time frame, and so it failed to break through. Didn't even get to that daily because there is a bigger time frame resistance in play, and down we go. We're gonna keep going down, and you have to kind of keep going down because your support's all the way down here. So like there really wasn't much to keep us up. There was sort of something through here, but basically down. So next step is this one, completely clear of trend. The body, bottom, top, opens an accumulation, completely clear of trend. That's your next one. This is nothing, and this is where we're at now. So we're effectively working on positioning a candle in the right position to open the next one on the other side of that trend. And if we do open it on the other side of that trend, so we've got some targets that then come into play. You know, so there's a higher time frame target through there, which is sort of like your 188. And we know that, you know, we know from looking at some pretty ghastly high time frame charts that past 188 we move into some pretty big resistance, which can send us back to a nice new low if it chooses to, or if it holds. And also this in itself, this whole thing here, is one big form of resistance, and so is this. You know, so it's all sort of like when you look at it on individual time frames, it's quite easy to see it. When you look at it on a lower time frame like this, you sort of have to use your bit of imagination that that's one big candle going up there, and then that's another big candle coming down here. And if this candle breaks below the accumulation start of that candle, then you create some form of resistance. So here we're at, you know, so we're here. Now what you can do a little bit more advanced is you can actually start to break this down. So if we map out some resistance levels there, that's your pure daily resistance there. So what we've done down here is we've created 2 days in distribution. So that actually creates a daily support trend. So because one is above the other. And nice long wicks, which means this candle opens free and clear of the daily support. It hasn't even revisited the daily support, so that's a good sign of strength. And you can start to work with these trends and actually array them both on the top and the bottom. So this daily here, oh, more messages. Someone might want to take over the message thing for me, so that, and the DM thing for me, so that. Does anyone else create links? So that's our main, or our starting point. So this is the oldest suppression trend that's out here. It's the strongest one. If we get above that trend at any time in the future, you're going to see one hell of a pump. Right? It'll fly. This is our current interior of that, which is coming down here. These are really just here because they do show relevance. Like you can kind of see the confluence there where we tested. We tested the broken trend. We broke it here. We came back for the retest. The problem with when you break trends is that if a lot of time passes by, the retest can become really deep. And it's all sort of just confluent, because we were in a 2 week short. This gives a retest target, which, starts to go, okay, well, we got retest down here. We're in a 2 week short. We're going down. And each one of these arrayed trends is effectively a level of distribution as price comes down. By the time you get to about 5 of those, you're probably really due for a big reversal. Most of the time you don't get past about 5 arrays before you start to see the price really try to reverse. So yeah, we're here, and if we were now to chuck that down to like a 4-hour time frame and hunt for our pivot point. So a pivot point on that daily trend is here. So starts back here. Looks like it's floating in thin air at the moment because we're on a different time frame, and that's your pivot point. So if we look for a 4-hour candle that opened completely clear of the trend, we get this one. So we can take that pivot point. You can't move the start, right? So you got to keep the start where it is, but you can move that pivot point to there. And when we do move it to there, we get this one. So that's completely clear of the trend. So we move that to there. Okay, so this trend is now what you would call a 1-day arrayed to 4H. Right? So a 4-hour candle breaking that trend can initiate a 1-day move. Right? So that's how that works. But we've also got distribution happening within the 4-hour now. So you can do an interior on that interior, which is where you come here, there, that's your first. So accumulation to accumulation. Zoom in, make sure that is clear. Yes, it is. So let's move that to there. So we're accumulation. That's our current downtrend. That candle is our break right there. And you can sort of see that, like, once it breaks that, it's going to start looking to ladder up. And our daily support trend is this one. We haven't actually gone back to revisit that yet. And our 4-hour resistance is there. So the long that existed, supported by a higher time frame move, which is in progress, was the break of this to that. Right? So that was your long. So you could get trickier and go, okay, well, once you get a trend break, you're going to get a retest, or you're going to find some kind of support, and that support was in here, and that was that candle. So like you could be Mr. Smarty Pants and try to get that if you wanted a little bit more. But basically, once you broke that, you were going to head to here. And in heading to here, this actually becomes its own support. And that support now needs to hold to try and continue the price moving up. And the end result is that the price wants to target that exterior. or the exterior to the interior. And if it breaks that, then the price wants to target this, which is where you start to see bigger moves. So that's pretty much what's been happening over the last day or so. Is we've found we've created a daily support, which is all based off older weekly support. So we ran into older weekly support. That's now given us a new interior daily support. We've been able to refine that down to say like a 4-hour chart, because who wants to wait for daily candles to close? We want money now. And we've found our first resistance, and we can long from there to there. Once you've hit that, you should see a retracement. To break that resistance, you need to get above the distribution candle, because that's where distribution started. Once you get above distribution, then it means accumulation has taken over distribution, and people are happy to pay the money, and you're happy to go up, which is why 177.916 is such a valid, or such an important sort of price to get over. So we can continue to array these trends. So let's see, wrong tool. So if we work on our interior, okay, that's our next one. That was our next break. That was it moving up. So it's still just laddering up at this stage. That's our next one. We're looking to close over the top of that, in the next hour. If we close over the top of that in the next hour, then this interior trend here can effectively become the bounce point to try and break that break level. And if it breaks that break level, then it can move to the next one. Our next box. That's our next resistance. This resistance is, as you can see, that resistance, which is also a short. So if you know how fib trades work, it's also a short. That was tested there, which created your fib short, which continued your downwards ladder because you were being suppressed by the downtrend. So that's effectively, that was a trade in itself if you were shorting, and now it's going to act as resistance to go back up. But it's already kind of weaker resistance because it's been hit once and it's pushed the price down. Been hit again. Well, in fact, it was hit once on the wick, it was hit once on the body. Being hit a third time, it's probably not going to be as strong, as what, say, this one was when it was hit here for the first time and rejected the price. This is probably not going to be just a straight pass through, because it's inside here you've got lower time frames which basically will act as resistance. So it's going to bob up and down a bit, but it'll get through there most likely. And of course then it becomes that one, and then up here is your next level. And all of this is just sort of smaller stuff inside the bigger stuff. And ultimately, the bigger stuff is the one that's leading the way. So the daily, or I think we might have a 2-day trend that we're going to break, are going to be, the more important ones. So in 1 hour and 8 minutes, if this candle stays where it is, the next one opens. If the next one closes in 4 hours, in accumulation, then it breaks that trend, which flips it from being resistance into support. And then once it has support, it will go for a horizontal level. The horizontal levels that exist inside here, the bottom one's already been hit, so the top one, being the break level of the resistance, would be the next target. So yeah, so you could see in the next sort of 4 to 8 hours a recovery of 177 if it continues to ladder up. At any point, these resistances can reject price, and when they reject price, they create further distribution. So if we take this as a trend, so distribution to distribution, we move up. This was higher time frame resistance from the past. So like if we go back here, you see the bottom of that wick, and there's another one over here. So this is what was suppressing this. So when we got this, it tried to push up into it. It hit this and this, and it rejected. And that's kind of why you got to be aware of those higher time frames, because if you were just locked into this 4 hour, you would have been chasing this. But over here, always look left. Over here, you had things that were going to get in your way. So we've gone through that now, or we're working our way through that, because as we break trends, as we form supports, we can push our way up through resistances. So you always need a diagonal to break a horizontal, and horizontals break diagonals because they keep price moving sideways. And if price moves sideways, it's going to break a trend, either to the upside or the downside, but it's going to break a trend because it's just going sideways. So this candle here was the first one that broke this support. And it broke that support because it was held sideways by that horizontal resistance. And when it broke that support, it initiated this downwards move. Which is kind of the point, I suppose, of today's thing, is that, we want to know where this is going to stop, and if it's going to stop, and how to tell if it's going to stop. And let's clear all that. So now let's look at a time from the past. Let's look at this ginormous run up here, and let's go out to the highest time frames we have. So this is where we were once upon a time. This was our bear market. So let's array some trends, and let's look at some resistances. Okay, right. Trend down, broke trend, targeted resistance, rejected. Okay, so that's a really high time frame resistance, and that was your first, your first downtrend. That was your first break of downtrend. That was the target of the resistance, and that sent price to continue down further. And normally, like I say, when you're in distribution or accumulation, you're probably going to have about 5 stages to it. Magic number that. There's so much stuff in confluence and trading. People talk about 3 steps up, 2 steps back. When you're ranging, they talk about Elliott waves. They talk about all that kind of stuff. Magic number of 5. I don't know why, but it just is what it is. So that's your next step. And so we're still on a downtrend. Here we go. We break. And when we break that downtrend, we're going to try and target some form of support, but there's not really too much going on there. But the next candle basically creates further resistance, and we're definitely in accumulation at this point. So there's our next trend. Here's your next one. Okay, you've hit 5 now. When you get to this level, first thing to note is that it's your first time that a short's gone long. So if you trade based on fibs, this was your short, right? So 2 broken by 2, retest, dump, and in the dump it creates a secondary one here. And that was going to play a part in the future, but it was all the way over here, years later when you got that short. But it's if you did it based off a lower time frame, because this is the close of a monthly candle, but in that wick is the close of other time frames, because they're closing, as the price is moving up. So somewhere inside these wicks, you've got a short, right? Because that means this is effectively a short at some 1 minute to 1 month level, because the bottom of the wick there would have been a close, it could have been a 2-second close or whatever, but there would have been a close. So this is just further rejection off that group there. If you just map it out really broadly, like if you were a swing trader, that was your rejection, there's your rejection, price goes down. So you're still just rejecting, and you're still just trapped under trends. And then same thing here. If you zoom in, if you were trading fibs, there's your break, there's that rejection. It's just going to keep going down. If you were trading support and resistance, this creates resistance, short into that, down it goes. So whichever way you're doing it, it's all kind of the same. But this is different, right? So we've hit our 5th array of that trend, and we have changed structure-wise. So now you'd be looking at a long, which is going to be in here, and sure enough, we start moving through accumulation and price starts to go up. So the buy point on this was around $14 to $7, whatever, when we were in there. And when you start looking at where your resistances are, well, your resistances get hit here, and that causes that retrace, and then they get, that one was already done. Once price broke above here, once it hit $50, it had to sort of fly, because there was nothing to stop it on a high time frame between 50 and 74. And once it got above here again, you should have seen a massive pump, which is where that candle comes from. So if that was basically the end of our downtrend, what you start to see is an uptrend. And you can see how that's been, this is accumulation, it recovered the uptrend, and then that's kind of held it the whole way through. That's valid. That's valid. That's an array of that one. And that's valid. Okay. So just some of these make it a little bit clearer. What you really don't want to do is you don't want to have a down month, at this point. If you have a down month at this point, you're under this. And because you're under this, you're going to go to this. And that, that's where we're like, okay, we really want it to keep going up. We were very lucky to keep going up. Okay. So you can continue to go 1, 2, 3, 4, 5. You skip this one because it opens on that trend. So you're there. You're skipping this one because it's on the trend. This is clear of it. So you go there. And so that was our high time frame suppression trend during that accumulation. And you can sort of see roughly, rejection until here. Now, once we broke that, well, that was going to be our target there, 243. And of course, over 243, it was just going to keep going. Hey, there we go. So, once you've broken that, there was no longer any monthly resistance. So this entire box here is gone. And so let's just delete that. And this is now this candle was the candle that basically said, okay, you can go to an all-time high. So this trend here, therefore, was the one that you wanted to array. So if we go back,
so gillet. Oh, snap my keyless.
All right, so let's have a look here. So that was our pivot point. That was a daily candle that closed completely free and clear of our monthly. So if we take this over to there, okay, that was the daily candle that said we're going to go to the moon. Because if you take the origin of that trend is monthly. So the trade is monthly, but you've said, okay, what daily needs to break this monthly to move to the monthly target? So this was a point where you could just jump in along at the close of that candle, which is 196, and you could just long it safely to 243. So that was there. Oh, someone's mic's open. Who does? Budwas? Hey, there you go. So yeah, that daily candle breaking above that trend. So that is, so at that moment in time, that was a 1 month refined 1 day. And that was your trigger, and that was your target. And so basically, long TP. You could be a moon boy and just continue to hold it, because chances are it is going to keep going, because that was the highest resistance that existed at the given moment. So let's go back to here. Yeah. And that's how you get into a GOG candle like that without actually having to wait for it to close. You refine the trend back to a lower time frame, and then basically you take the trade on the break of the refined trend. And so I don't think that was not our all-time high. So at this moment, you're still sort of following this trend here. And if that trend gets a candle close underneath it, that's the point at which the price is then going to reverse down, and it's going to try and find some form of support, like once it gets and closes on the other side of that trend. So sometimes you just, depending on whether you're trading on high leverage, low leverage, spot, whatever it is, you just have your stop loss. You ought to take in profit at there. You follow your own rules, but let's say you took 50% when you hit first resistance, and then you just held the other 50% to see whether we break the support trend. And none of this is a break, right? It doesn't matter whether the wick touches it or goes under it. It's not a break, right? That's actually still not a break. All that was a retest of that. And still not broken, because you've got to have a distribution candle fully, right, below it. It's got to close fully below it. Okay. And as you can see, it doesn't. And that goes up to our all-time high. Okay. This trend could be arrayed. Like you've got enough time in there that you could now take this and array the trend to something smaller, and I'll show you that in a sec. Okay, that one doesn't. Okay. And so this has not actually broken our monthly support trend. All our weeklies are screwed, but this hasn't broken our monthly. The next one, if it opens and closes in distribution, breaks that monthly, and that's when you start to see that bigger move to the downside. But at this stage, it's got 8 days to get up there, and then it's got another month to either break, because an accumulation candle, even if this closes, it's on trend. So an accumulation candle for the next month does not invalidate that trend. It can be under here like this was and this was, and it's still got that support. So it doesn't mean it's game over yet. But let's look at this. Okay. So figuring out that this rejection was going to happen is pretty obvious, because you've broken the top part of your resistance, and typically whenever you break the top part of a resistance, you're always going to have some kind of rejection. It's not the wisest rejection to trade, because you never know how far you're going to break by before you come back down, but the thing is, you're normally going to come back down. So we've got this monthly, and if we take that down and look at it on a daily level, find our pivot point, which is here on that trend, find a daily close that's open and closed completely below the trend. Is this one? And take off the screen. There it is. Take that. You do not move the start of the trend. You move the pivot point. Only the pivot point. Okay. And then we've got this one, which is the next one. We go to there. This is not relevant because it's opens on one side of the trend, so you skip over that, and then we go to here, then the next one, and then here. That is a daily, yeah, so that is a monthly trend refined to a daily, and then you'll find this pivot point can become the anchor point for, so there becomes the anchor point for that, which is basically the same. Doesn't really change trend all that much, but so then that becomes the anchor point for that. You sort of see sometimes this gets quite tedious. Then that becomes the anchor point for that. And you've got to look really closely and see whether or not that was on the corner, which it was, so we skip that. And it becomes the anchor point. And so that trend, when broken, was going to go down to this trend. So you could pretty much short this candle and short that day down to that trend if you really wanted to, which it moves the anchor point to that. There's a point to all this, by the way, we'll get there, which goes to that. And this candle breaks it here. So that went up. Trend trading can be a little bit dangerous because your first resistance is up here. So when we broke that trend, we'd already tapped that resistance there before we broke that trend. So then we go up into this resistance before we start to push down again. So it's always better to trade horizontals than trends, but trends sort of tell you when things are going to break. So that becomes the next one. That was our break. That was our support. So we broke trend, we found support, we went up. Starts to move this out. There. Okay. Now this, you got this really big pump. So once you get a really big pump like that, you're going to want to start to look for weakness forming, so you can refine that. That was your first sign that reversal's coming. And so you got to look for something over here and go, okay, where is our resistance? And that was our break level. Right? So this says it's going to reverse. It's going to go up and hit something, and then it's going to reverse. So what it did was it went up and it hit the break level, which made that. And this had hit the break level, and that was the start of your downtrend. So if you'd been refining your trends, you would have not TP'd on this one, right, as such, because that resistance wasn't really resistance. It was going to go up and find something else. You probably would have TP'd there, about 238, because you'd already hit that resistance. And so I was like, okay, get out, which means you don't get the top, but you get out at 238 before it falls down to 179 to retest the trend. So once you've got two accumulation candles, those two, and that's your new resistance. So you've got two accumulation candles, you get a break of that trend, but it's inside this resistance. The chances are it's not going to go up, especially because it's the first trend. So once you start distribution, breaking the trend the first time is probably not going to go up, very unlikely, especially when it's actually in the resistance that's formed, which is this. So then your next trend is that one. Your resistance is there, and we break that trend, and we go into the resistance, and then we reject. The next one is there, and now you can start to work on your interiors. So that's coming down here. There's a break, but unfortunately there's resistance. So you're basically just breaking trend into resistance and laddering down, and you're just going to keep laddering down. So what you're focusing on is a break of this exterior, because once it breaks that exterior, the target therefore is to go back here, and that's when you're going to get that next decent move up. And what you're looking for in all these interiors is the reversal of trend, and that'll be through some form of accumulation. So that was your next interior. Don't know about that. To zoom in on that. Nope, that's on trend. Ooh, yay. Okay, so that was a break of trend.
Its
target is here.
Theory. Right.
So this is your first resistance. That was the break of third or fourth trend, and that was your target up into this box. Breaking this point then invalidates that resistance, and we're looking for a accumulation close on the other side of that exterior trend. So like I say, when you break the exterior trend, you're looking for a bigger move, and that's the break. If that closes, it does, down it goes. So this has invalidated that exterior. So all of this interior stuff is gone now. So that's our new exterior. And how many are we up to? 1, 2, 3, 4. Okay, so we're on 4. So I won't do these, well actually I will do these interiors, but basically we're on 4 arrays of the exterior, which means it's getting ready to pop. So that was our new interior. So we'll probably delete all of these. Okay. And we broke it here. We went and found some kind of support in this, and then we went up. And this resistance, our target is here. And there we go. And that's broken. So this resistance is now toast. So on the way down here, this is the first resistance that it's completely wiped out. So we're on our fourth array of trends, and we've just wiped out a resistance level. We haven't wiped this one out yet. Like, this did its job. It rejected, it sent down, it created the next exterior trend. But now we've actually had resistance break. And there you go. So resistance broke an exterior, went to the moon, because we target the origin of the trend. And so that was 4 arrays, and I guess I missed something, which I probably did. And off we go. So there's really nothing now to stop that. Like, this broke your all-time high resistance. This has now broken your all-time high resistance. And just evidently, this is why you don't chase a pump. When you break a resistance, there will be some kind of retrace to support. So you let it break, you wait patiently, and then you enter on the retrace. And this, oh yeah, that was all-time high. So we went to all-time high, broke the resistance, we TP'd. Yeah, hindsight's wonderful, eh? Because you TP at that break, and then you start this. That's your first downtrend, and that gets arrayed to there, gets arrayed to there, there. Get rid of that one. So this is your new exterior. Interior, interior. And so we're on 2 interiors and 1 exterior. And that is what? Yeah, so now we've got another. So 3. On the line, doesn't break it, doesn't change your trend. Okay, that's where we are now. So you can sort of see what we're waiting for. We've got 1, 2, 3 legs of distribution. Ideally, that candle can't break trend. Tomorrow probably could, if we go up. If we close today in accumulation and then close again in accumulation tomorrow, then let's just hypothetically say we have this. Because once this trend breaks, that is your target. Like, it's into this block of candles here, which is where the whole 188 comes from. So let's just say the next exterior trend ends up being that. Then you got 1, 2, 3, 4, and then the next exterior trend might end up being that, and then you got 1, 2, 3, 4, 5. And once you got 1, 2, 3, 4, 5, you've spent enough time in distribution, and that's when you do that. And then once you break that, then that's when you do that, as you're up in the wonderful world of no resistance anymore. So that's effectively trends. How did you know to sell out? And you wouldn't have got the top, because it's very, very, very hard to predict the top. But how you would know to TP is that you had this form of resistance here, and once you get to the break point of that resistance, which is probably about 270 or something, that 256, and then inside that you've got this here, which would have got you to 264. So TPing around 264 would be what, like, the super safe, on that bounce there. TPing at 264 would have been about the super safe way to exit, because you don't really know how high it's going to go past there, unless you're following that trend on a really, really, really tight basis, and in which case you could probably see the reversal somewhere up inside that day. But If you just get rid of all of that, and if you knew that rejection was going to start at that point there, and there was going to have to be some kind of retrace to support, you could drill down into this. Let's see what we have. And you could look for, this is structurally breaking up, this is structurally breaking up, this is structurally breaking down. So, on a 4-hour 271, would have been inside that time period, the reversal of the 4-hour. There will be, so all of this is still structurally breaking up, up. That's your 1-hour reversal. So if you're sitting there watching it, you could have followed this trend up. And when you saw that 1-hour reversal, you could have got out at 284. If you were following that trend up and really super glued to your screen, it gets a little bit hard on like a lower time frame because you might have just exited when you saw that at 269 because that's a structural breakdown. That was a structural breakdown. So once you start getting into the lower time frames, there's going to be lots of ups and downs because there's lots of low time frame ranging inside the high time frame trend. And you've got to, when you're dealing with low time frames, you've sort of got to look more at the candles as fractals of something bigger, like the way I see that is that. So you've got that push up and you've got that bleed down, and you break the accumulation point of that candle, the bottom of it. As soon as you do that, you're going down. So that's that 184. So that's not any different than what you just saw on like the 1-hour time frame. It's a bunch of lower time frame candles creating a reversal on this time frame, which is effectively just hello that same reversal. Like if we look at it there, so you can sort of, like, if you're watching a low time frame chart, you can actually see the other time frames once you've stared at these damn things enough. And that's, so the 1 hour told us goodbye, and you could have got out at 184, which I think is about, I think I got out slightly below that. There. Yeah. I waited for confirmation. So basically a break, a secondary break, an exit. So 276. And now you, funnily enough, start your downtrend again. So we've sort of gone through all that, and then you track your downtrend, and eventually your downtrend goes for enough time in accumulation to then create a reversal. So if you're a really, really high time frame trader, what you would have noted is that you have monthly support there, and you have a monthly break point there. So that was your monthly resistance. That. Okay. This is how you see a blow off top. It's like when there is no resistance anymore, but there is support on a higher time frame. So this is so this wick up cleared monthly resistance, broken, gone. So let's just delete. We're over. And created monthly support. If we revisit that monthly support and we do it quickly, we don't have monthly resistance, right? Because to create monthly resistance, we would have to break that point. or we would have to spend a bunch of time to create another monthly level. So if we look at that from so let's just look at that from a weekly perspective. So we've got so we've got no weekly resistance either at this moment. And we've got this monthly support. And within that monthly support, we have this weekly support. And we have this weekly support down here, which was the reason for that. And so that's kind of like our support structure before we saw what looks like a blow off top. So we've now got weekly resistance here, but the key thing to note is that we've got weekly resistance and monthly support. So this is going to reject, and it creates weekly resistance, and that's about when our 2 week short started, because we had 2 weeks of resistance, so hence your 2 week fib short. So there's our 2 weeks, monthly down here. Okay, we move into our weekly support. We get a bounce, like that's what you'd expect to see. So that's a trade. Like you can trade these supports. It's just support resistance trading. And where do you exit? Well, you exit there, because that you haven't broken that, but you've broken that. So fractally on some other time frame, that was your first resistance. So when you went into your support, you longed back to your first resistance, which, you know, like just rough numbers is like 173 back to 200, right? That's your, I mean, obviously it went to 176. Sorry, where did that go? 176, sorry, rough numbers, 183 back to 200. So not the kind of thing you can do on 100x, like if you're trading on these types of timeframes, but it gives you an idea of the bias, like which way is price going to go. And if you know that it's going to travel from 183 back to 200, then in that entire time frame, any lower time frame trades you take, which you could take on higher leverage, are going to be in that direction. They're going to be longs because you've hit that and you're going to travel back to that. Let's just get rid of that. Get rid of that. Okay, so this is all weekly so far. None of it's monthly. There's no more monthly resistance on this chart, but there is monthly support. So take a guess at what happens if we tap that monthly support, because it'll happen at some point. So I'm not going to put the box on, but that's more weekly. It's 2 weekly actually. What happened when we tap that monthly? There's nothing to stop it. Like that's how you see that kind of thing. Now, the problem with, well, there's a couple of problems with there being nothing to stop it. You don't know really where to TP because there's nothing to stop it. But at the same time, you know you're going to get a big move because you've got support underneath, which is at a much higher time frame than any resistance that you've got above. And so therefore that resistance above ain't going to do shit. It's just going to get folded in half and kicked out the door. And that's that blow off top. So like words like manipulation and all that kind of shit get thrown around, but really all we did was we hit a monthly support when we'd already cleared all forms of monthly resistance. So there was really only one outcome from that, and that is it was going to go up, and nothing was going to stop it until it got to the top. And or found a top, and then it has to kind of create something, and that just happens to be what it found. You can use things like range fibs to try and estimate these tops. Like you can look at these candles here that go up, this string of candles, and you can have a look to see what they broke, and you can do that. And it gives you sort of, what does it give you? It gives you a number around 306, which means you wouldn't have got there, like you would have been $10 out. You could have used that. You would have fallen well short. I mean, it's going to go above here, but the thing is, you don't know how far it's going to go above there. So using range fibs to sort of estimate where it's going to go is pretty much all you could do. Actually, fuck that up. It's that. Hey, that's right. So base distribution before the move, which was that. Broken accumulation, target 191. So you could have put a TP at 191 and you would have got it. But that's not what I did. Wasn't that smart. Okay. Shit, there's a lot of people watching. Questions? And not all at once, please. Are you trying to talk Ultra? Yeah.
Hey, huh?
Hey, Charlie.
Hey, did you record the meeting?
I didn't.
No. Okay.
I'm not that tech savvy.
Okay. Fine.
Okay. If there's no questions, or are there questions? Are people writing in a chat? I don't know. Show chat. Oh, what's this? Dinner time.
Yes, they're asking questions.
Okay, questions. Let's find some questions. So
Istochi was
we...
asking.
Oh.
Oh, there's somebody asking, how do you select the candles for the exterior trend? Is it wick to wick on the distribution?
Yeah. Yeah, so support trends on the downside are going to be distribution to distribution. And resistance trends on the top side are going to be accumulation to accumulation. So like if we jump back in time to here. Okay, so that's your first support trend, right? Because that can't be a support trend. It's going the wrong way. So that's your first support trend. And it's backed by your first fib trade. Yeah, so you've got, that's your first fib trade. And your entry is here. You've got a TP here, 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 and it didn't make that one. So this is sort of if you're trading with the greater time frame trend, this is 100% win rate. This is, about, can't remember, it's 40, 50. This is about 20, and that's about 10. Right? So, but you got to make sure you are trading in the right direction. So that's your support trend. This candle is on it, so it can't break it. And that's probably one of the key things like to learn about trends is that to break a support trend, it needs to be a distribution close, and it needs to be completely free of the trend. One that's on the trend just can't break it. Like the wick can be on the trend, but the body can't be. The body must be closed. Because if you think about like the wick of a candle, let's say the wick is really high and the body is down low. So, like, you know, this type of thing. Is that little? I do this all day long and I still don't know where the tools are. Okay, let's say you got a candle like that versus candle like that. Okay, if this was a monthly candle, this long wick is a 1 minute failing, a 5 minute failing, a 15-minute failing, a 1 hour failing, a 4 hour failing, a daily failing, a weekly failing, a 2-week failing, a monthly, you know, whatever, close, right? So that long wick to the upside is, on a higher time frame, is continual failing of lower time frame, if that makes sense. Likewise, a long wick on the bottom is continually breaking to the upside those lower time frames and escalating as time travels through that month. So if you've got a trend like this, this is actually just working its way back up to recovering the trend. Like that particular candle in that moment can't break the trend, and it's got to be completely clear of the trend, because once it's completely clear of the trend on a body, it means that there's been lower time frame breaks continuing to the downside and escalating on the other side of your uptrend, your support trend. So your support is getting lost on a lower time frame, escalating to a higher time frame. And once the higher time frame closes, that means that you've lost all support of that trend on its relative time frame. So like if we play this, there's your next one. If that keeps going down, you're just losing time frames, and therefore you're losing that trend. And that'll signify, so that signifies the beginning of the end for that trend. It's gone. So even if the price goes up now, that trend is gone. And that's your new trend. So there's some positives you can look at, you know, when it comes to how a trend is broken. So like I guess it seems sort of negative when a trend is broken, because you're thinking, okay, it's going to go down, but how is a trend broken? Is it broken by a candle with a big wick, or is it on the bottom, or is it broken by a candle that's really solid? Because although this was breaking the trend, this trend that's up here, and it has broken the trend, it's opened the new trend from this point, that array, it's opened above. Right? And that's really different from what, that was the formation of the trend, but it's really different from if the candle had actually closed with the body down really low, because if it closes with the body down really low, that entire month has just been a complete breakdown of all those time frames, to the point where opening there, sure, it creates a new trend, and it creates a new trend that's on the verge of collapse. So this is not necessarily a bad way to break trend, because it creates a new support. And there you go. You actually get price going up, and I mean, this is doomed to fail, like ultimately, because once you start to look at the bigger picture, the trend broke that. Because it broke that, it's going to go down. But you get a bit of a relief rally, right? So, okay. And then that's sort of like your indecision. You've got a lot of stuff breaking down, you've got a lot of stuff breaking up. This candle opens on the trend, so it can't break the trend, but the next one can. And if it closes like that, So what that means, like I say, is this little wick to the top and this big body down, and the wick's getting smaller at the bottom. This just basically means that you're failing at lower time frames. So like you're looking at weekly trends here, or weekly candles here, but you can tell a lot by just how that weekly is. Like there was a lot of upwards buying still going on here, and then less, and then it became more selling. And then it became, you're going, then down you go. And the main reason for this indecision, and this is because you'd run into a weekly support. So that is a weekly support, and going below there breaks that weekly support. And that was the weekly support that kind of like slightly out, but that was the weekly support that led to that. And breaking that wrecks that as well. So you don't have another weekly accumulation candle yet, so you can't even create your first weekly trend to break. And that's so you've gone into your weekly support, you're getting your bounce. Your first target should be that 197 line. If it gets there. Oh yeah, there you go. And that's because all of this,
Sorry, honey.
full that is now resistance. Right? So once you broke below that 197 line, all of that became a resistance range. You went into this support, you go back to test that resistance. So that was a trade. You could have taken that trade, and it also, because you'd hit support, you got your first accumulation candle, which meant that became your trend. With that becoming your trend, you're now looking for a break clear of the trend, because it has to be clear of the trend. And instead, what happened is you hit resistance and you came back down. And it's only your first downtrend. And so, when you start to get a downtrend on a weekly level like that, well, that's your bear market starting, because you know that you need to have multiple breaks of trend to basically go through the distribution phase. So yeah, that was the start of your bear market. And you technically could have shorted from about $200 and held it through multiple trends and ended up pretty low down. So yeah, trends on the top side, to answer the question one more time, is accumulation to accumulation. On the downside, it's distribution to distribution. The only time you can array or move a trend is when the appropriate type of candle, so like in this case, it has to be an accumulation, when the appropriate type of candle opens and closes completely free-bodied of the trend. Right? So that candle did not alter that. Like if I just get rid of that line, I can't do that. That's wrong, because that body is on there. Right? So it's not that, it's that. Right? Because that body is distribution, and it is completely clear of that trend. And that becomes really important when you start to array these things down in time, because you can find like 15-minute breaks of monthly trends that lead to, the monthly targets, and those are your really big trades with really good risk rewards. Although you'll be in them for a while, but because they're still a monthly target. But the thing is, like, you can refine trends down to really, really fine levels sometimes. But yeah, that answers that question, hopefully. Next question. What relevance, if any, do liquidation heat maps on the mechanics of TA and price action? I don't know. My tin hat theory is price is always going to go where price is actually telling you it's going to go. It's just, is it worth it going there? Liquidations, I guess, make it worth going there. They make it easier to get there because they're probably spending less money. Smells like tendies in here. I don't really know. I mean, I look at heat maps, and sort of what I see is I often see targets that are just sitting there, and then I'll look at like a heat map on say a 30-day, and I'll see, okay, you've got liquidity there, and then you look at it on a 7-day and you go, oh yeah, but there's kind of a big gap in getting there, then you look at it on a 1 day and you can kind of see that the gap is starting to get filled. And once the gap between where the higher time frame liquidity is sitting and where the lower time frame liquidity is sitting, you start to generally see the moving in that direction. You know, that's pretty much what I see. I mean, like this is, I'll just show you like a weekly, just a pure weekly break. It's like, so you get the idea of, replay tool. Bye. Okay. So see this thing? Stumbled on this the other day, which was a good way to make money. See, it doesn't take much. Like, one box, 2 lines. When that candle closed, down there. Yeah, and that was swing trade. I mean, that was just a 13% move, but still, you know, 13% with 2 lines in one box. And then, you know, your next resistance is some kind of fractal in there, and then your next resistance is some kind of fractal in there. And if it breaks the top of that, then it's got to break the top of that. If it breaks the top of that, it goes to the moon. What else we got? Finally some proper teaching. What's your go-to indicators? Nothing really. Like indicators, most indicators tend to be lagging. Like moving averages, they're lagging. Like MAs, everything's lagging. Like it's all based on history rather than future. Yeah, I don't know much about RSI divergence. I mean, I looked at RSI, Stoch RSI, whatever you call it, stochastic RSI. I looked at all that kind of stuff early in the piece of trading. It's just, I guess if you put it all together, it can give you some form of confluence, but it's all lagging indicators. Whereas if you actually want to really succeed as a trader, you've got to basically be trying to predict the future more so than anything else. 11:11. I think I can hear you back. I think I can hear you, kids.
Oh shit.
Maybe mute you. Yeah, so you've sort of got to be more looking at the future. Like where in any of this have we sort of said, you know, RSI is at the top level or whatever? Because I tell you what, RSI can stay at the top level for a shit long, like it can stay there for a long time, and price can keep going up even though you're at the top. You know, I think the higher the time frame, some of that stuff sort of works, but like that's more for spot positional swing trading, and there'll be really big, you know, differences between where you could have exited and where you could have entered and that sort of stuff. I think it can be done profitably with large sums of money over long periods of time, but they're not really that good for leverage trading. You know, like, you know, this is one line that says when this breaks, and it's one box, and it doesn't even have to be a box, like, well, it's 2 lines, but, you know, you start there, you break the trend, it goes there, you're right there, you're right there, you're right there. Fractally, even if that was one really big time frame, that would be your first resistance. That is, so, because this candle is already closed above that one, so that ain't resistance because this is above that. Right? it was resistance at that time, which is what kept it there. And then when it broke the trend and closed over the trend became support to fight the horizontal. It's recaptured the horizontal. By recapturing the horizontal, the price is going to go up. The minimum level it's going to go to is that, because that's some really high time frame block in there. And so that becomes first TP, and then that becomes, that becomes second TP, third. So this is all just looking at, like, that's a bunch of weekly candles, but it's multi-week structure inside that. And then break level there. You've got a new arrayed support trend there. This is not able to break that trend. The next week is. The price probably will not just go up and up and up and up and up like that. Like there'll be some form of retracement, and then there'll be some form of up move. It'll happen off one of these resistances, and then once you get that, you will have a weekly. So once you get one more distribution candle on a weekly forming, and it forms, as long as it forms above, that straight line, then there'll be some kind of weekly. So yeah, to answer your question, I'm not really that big on indicators. Like sometimes they're just helpful to help you spot things faster, but yeah, most of it you've sort of got to be more looking at what could be the effect of what's just happened is more important than what has just happened, if that makes sense. Can you trade crypto charts with these traditional methods? Yes. Do they act as you would expect enough? Yeah, 100%. They always do. Like, it's like that, that blow off top that I covered there, or what looked like that blow off top. All that was 0 monthly resistance bouncing off the existence of monthly support. And time frames have power, so like in strength to them. So like a 15-minute resistance isn't going to do shit against a monthly move. It's just it's a blip. So yeah, it kind of looks like it's something out of the ordinary. It's this big move. It comes out of nowhere. It just sort of smashes up, but it's there. What would have invalidated that would actually be more time spent at those higher levels, because if you spend several months at those higher levels and then you start to break down, you can create monthly resistance, and then the monthly support that's below actually has a target of monthly resistance. But when you go down quite quickly and then shoot up like that, you just can't, like, there's nothing to stop you, because yeah, you basically went up and down really, really fast. Correct, Lytton. Yes, correct. So yeah, the cotton candy TA thing, although it's like painful and takes a really long time to go through, and a lot of people are going to bag it out because e.g. they just don't understand it, and actually, to be fair, he can be very vague and he can just ramble on and on and on, but it is worth doing if you have the time. Like you will get something from it. You will get something from it. Yeah, I see what you're saying, but yeah. So one thing you do quite frequently. Yeah. So the fib levels are a good way to predict targets, and you sort of need, like, if you really want them to be 100% successful all the time, the main thing is that you've got to trade with them in the right direction, right? So that's probably your big thing. Like, there's tons of ways you can trade on a chart. You can trade support and resistance. You can trade trend breaks. You can, there's tons of things. But the one thing that a fib level will sort of give you, if you're trading in the right direction, is it will give you some pretty predefined targets. So I guess they're all important. And I sort of see in my mind, actually, knowing where to get out of a trade is actually probably more important than knowing where to get into it. Because too many people just get round tripped because their expectations are higher levels than what you're going to see in the time. Can you drop some raise at a current time and levels? What do you mean, Budwis? Can you drop some raise at current times and levels and give your humble opinion? Yeah, I can. So that's the weekly support that's holding this up. If we go below 155.1, we're screwed. As far as longs go, great for shorts. There's no weekly trend, so there's not much you can do as far as predicting when the weekly trend is going to finish. So at which point you kind of have to look for, do we have some kind of weekly support? So say what do we got? And these are pretty far back to start it. Yeah, we've got that, which doesn't look good, but you're on it, so you can't break it if you're on it. You know, so that's, we're in support, we're on the trend. Yeah, can't break it if you're on it. So we find our pivot point there, and we take that and array it to, oh, that's close. Array it to the first day. So that day is below it, so we can array it to that. There. So, and we've got a nice big wick. I mean, it's an indecision candle, but we've got a nice big wick, and we're traveling upwards, and we're holding that support. So you can try and find the highest time frame trend. So you don't have a 1 week trend to work off, but you do have probably a 2 day. You've got 2 days, you get 3 days. Yep, you've got 3 days. Okay, let's use 3 days. Okay. So that's sort of your 3 day target, or sorry, your 3 day trend. Can't really be arrayed too much. So let's try 3 days to 4H. That can be. Yeah, so there's your 3 days to 4H. 4H. See, resistance, that's where you got to be really, really careful about which trends you try to long. Trend break into resistance. Not a good idea. That goes to there. That goes to there. I mean, you can start to get, we go, it's basically that. That's that. and that was the start of your long there. So once you got that, bounce off that support, that close on that side of the fourth interior, you're going to break that. Now, if you didn't catch that, it doesn't really matter, because you built that support. So you could have longed that, and that would have meant that, like, you don't chase that and then get that drawdown. You wait until you get that close and the support, and then it's going to go for this trend, and which would have confluence with that. So that's kind of like trending. That's a combination of trading a trend break and support and resistance. Then you're on this side now of that trend. So if this candle closes in accumulation, its target will be to break that, which is your 177.9. And if it does break that, then that's your next resistance, which is already created that ladder down. Like, resistance can resist more than once, but eventually it breaks. So the thing is, like, if that created that ladder down, the next time it gets hit, it probably won't hold, or it won't hold long. That's your 186, you know? And then once your 186 goes, then there's your next one. And that's not very big. That's up there, 192. And that's on that time frame, but of course, like I say, there's bigger stuff in play, so you want to be pretty careful longing past 189 or 188, I think, is because this is a fractal, right? So like that there, that's resistance, and that's where you've, like I say, you got to be, sorry, that's resistance. Got to be a bit careful. 188, 189, you could be aiming for that target on a lower time frame and completely miss the fact that that there is a higher time frame resistance. Trying to understand how you precisely read charts with arrows. The arrow just says where it's going to go, or points something out. Trigger price for long entries.
Is anyone still up there?
Oh, hello? So trigger prices should be support, right? Like, in a way, they're just support. Fib trades start at support, or they start at resistance, depending on, you know, whether it's a long or a short. Like, you know, this is a fib trade in here, and if we just clear all this, what do we got on a 4 hour? So that's a fib trade. It starts when the support is entered, and it travels up. In this case, it hit all 4 levels. So TP1, TP2, TP3, TP4, bye-bye. Right, that's basically, that's a fib trade. How do you know that that's with trend? Well, that. Pretty straight and simple. On this time frame, price was in an uptrend. How do you know resistance? Well, that was a break point of resistance. That candle, which engulfed that candle, broke that resistance. So next resistance was going to be there. That had already been hit once, so it wasn't likely that it was going to stop the price. Next resistance was there. Next break top was there. What levels were you going to get at fib trade? Probably at least 2. Like, you wouldn't have known it was going to go to 4 because it could have rejected in there, and it sort of did. Like, if you look at the structure of those candles, that went up. It broke this break point. Nothing in there was resistance anymore. It hit that level, and went down to activate that trade. So in that moment, you know you've got a fib trade that's possible there. Statistically, if you're trading with trend, fib trades are going to be 100% win rate with trend at the 1618. Which is why they're just a super lazy way of trading. You only need to figure out a trend. You just need to figure out where things are going, and then you just long every single support. Boom, boom, boom. But if you wanted to go deeper into it, you go, well, that resistance was broken before the engulfment was closed. Sorry, that was hit before the engulfment was enclosed. And it was actually hit all the way over here. So it was the second time. So chances are that was useless. That was hit for the first time before the engulfment closed. Okay. So you already had weakened 2 different fractal timeframes that exist inside here. And ultimately, they're lower timeframes than what this is going to support. So then breakpoint is up here. If this had gone there, above that point, you would have seen a continuation of this trend. Without getting above that point, you are seeing early failure of that trend failing and continuation to the downside, if that makes sense. Hopefully that does. But the trade for a long in that moment was break, engulfed, resistance hit, possibly could go as far as that. If it hit that, it's going to reject regardless, but there's a difference between whether it hits it and rejects and whether it hits it, doesn't hit it. Doesn't hit it, you're going to get continuation of down. Does hit it, you're going to get down to support and then up. So, so TP around 188, yes, definitely. I mean, you're effectively TPing into rejection. You're going to reject one way or the other. The difference is, do you reject and recover, in which case you just get a lower entry and go up again, or do you reject and get downwards continuation? No one really, you can actually tell which way it's going to be. If you reach the break point of the resistance, you're going to get rejection and continuation, very high probability. If you don't reach the break point, you're going to get rejection and continuation to the downside to find the next support. This was super useful just now. Yeah. So you see the fib levels will give you TPs, and if you want to become more successful at it, you basically learn support and resistance as well. We're having a bit of a pop on BTC, yes we are. Yeah, and Sol's going back up into that 175 block, so 177.916 is the break of that resistance.
Hey everybody, Chargers fan here. Just thought I'd say hello and welcome to the server for a whole bunch of you.
Yeah, I've got more DMs too. Hopefully I haven't. Big tree, did you make it?
Yes, that was one of the dozen DMs I got in.
Sea change, just catching. Sea change. Did she get in?
Sea Change I sent her an invite like weeks ago. She still hasn't clicked it, but it never expires. So it's still in her DMs.
She's messaged me asking. Maybe flicker another one. She just messaged me asking.
Okay, we'll do.
4 more people. Cryptonaut Innocent Peer. Did you make it?
Yeah. I got in.
Cool.
Thank you.
I also just want to say, you guys are welcome to DM me anytime if you want to talk strategy. I'm always up for it. I'm not always the most responsive, but I'm always welcome to DMs. We got the Ops Live feed. If you're new to the server, check it out. There's a GitHub that I'm building a backtesting starter kit in. I've got a major update coming hopefully in the next week. And yeah, that's about it for me. Oh, and I'm pretty sure this video is being recorded, and I will post that link as soon as it's ready.
I don't think Innocent Pear made it, but whoopsie. So I'm just going through.
This is Apone too. I do have the beginning of this video completely recorded. I'm not sure how all of the audio is gonna come across, but know that we'll have the entire thing in some way, and I'll see if I can clean up the audio a little bit. Thanks for popping in, Sin.
No worries. So, any more questions, or has everyone had enough?
I just want to know, are you eating the gourmet tendies tonight?
I found these Nashville chicken. They're like patties. You're meant to make burgers out of them, but quite nice. You know, like I think more meat in them. It's been nice.
I'm all for the meat. You don't have to tease me. I had meat.
I'm now ready to go to bed. Okay, cool.
I'll just add one thing to this. This is Apone. Some of you guys know me from the Invest Answers, and some of you guys from in here, but I will thank CF and Sin for the kind of journey that I've been on here, trying to look for automation and putting the horse really like kind of after the cart. I tackled this a little bit too early, and I would just advise any of you who are looking to explore automation, using the tools that Chargers Fan has developed in the GitHub is 100% the way to go. Start back testing instead of just throwing money at the problem. It's fine if you have expendable money and you want to test things out, but you might as well just wipe your butt with it, because automation for the sake of automation is great, but back testing and doing a lot of the stuff that I know Sin's been doing is more valuable than just trying to get automation in there for one place. So that would be my recommendation. Make sure your strategy is completely sound before you start doing the automation. I know from firsthand experience. Thanks.
Yeah, I think automation for me is a tiny part of my income. You just can't. Manual trading takes time, but it makes the money. That's where you'll get your big trades. The thing with automation is, unless you can see so many things, like it has to see a really big picture, or you can only allocate a really small amount of money to each move. That's all you can really do. If you want to make an income, you need to know more things about the time frames, the trends, where the resistances are sitting. It's really not that hard, to actually do it. You've just seen firsthand. It's a couple little lines on a screen, and where you will lose is if you just miss something. That's the only time you're going to lose is because you missed something. And I found that in what for me was years of, well, not necessarily years. I think I spent about 6 months before I stopped journaling, but. In 6 months of journaling, what I found out is there were two things that really fucked it up. It was either emotions or it was just missing something. You just didn't do the homework, and that's kind of it, really. Rules. Are there rules for drawing horizontal and diagonal trends spelled out somewhere accessible?
I'm just going to quickly jump in here and say, yeah, I do have a couple of links to Sin's comments on horizontal and diagonal trends posted in the info links channel. And there are some scripts in the GitHub that do the horizontal ones I'm still kind of working on.
Yeah, so there's a couple different types of horizontals, so a lot of this you will learn if you do cotton candy stuff, but and a lot of it does result. A lot of it just comes from engulfments. There's just a lot of the stuff is just all kind of goes to the same area. Sin, it seems that soul is your weapon of choice. Yeah. Yes. Yeah. It's big enough to deploy sizable capital in without sending it through the roof, and most importantly, you can get out of it if you need to without sending it through the floor, and yet it moves enough to make the percentages worthwhile. So it's just, that's it. I don't hold it as spot. Like, it's at the end of the day, I know it's kind of goes against what a lot of people think. I mean, a lot of people who would have bought it at 10, 15, 20 bucks or whatever as spot and made really, really good money over all that time. But still, eventually, it's just another token. Eventually, it will have its dumps and it'll have its pumps. And like, if you traded it on a weekly basis through that entire time, or if you traded it on a monthly basis over that entire time, even just as spot, you would have made a lot more money than what you would have just holding it to this point. Like none of this stuff is really an investment. I don't like the word investment. I struggle with. Like I think the only investment is probably investment in yourself. Like you can learn things, you can get better at things, but like if you look at this from a monthly perspective, if you'd held it all the way from the top, I don't know why. Just don't know why you would hold it from back then. Oops, get rid of that. It sort of takes one trend line and one fib tool to know that 141 was going to become 68, and you just why hold that? 121 was going to become 68. Oh, sorry, 141 was going to become 68. And likewise, when you hit the bottom down here, and you know that your first resistance is going to kick in here, selling it at 99 and buying back in at 81. I mean, it went higher, and like you could go into a lower time frame and spend more time on it. But let's just say you only wanted to take a couple trades a year. You'd be buying down here where structure changed. It was your fifth array of distribution. You would have bought here, and then you would have taken at least some off the table, because you are holding your uptrend, but you would have taken some off the table in here, and then you would have put it back in again at 81. So I guess there's different tax rules for different people as well. So I suppose it is a bit different. And then your next level, because this, I'll show you this. This had already been hit. All right, so this led to that. That had not been hit yet. So you would have then taken money off the table once again at 202, and then you would have started the process of that, and you would have bought back in again, maybe on the close of that candle. I mean, you could have bought back in again at 167 anyway. You were going to, that was 100%. You're going to do that, and then, or you could have waded through all that and bought back in there, funnily enough, at 167. And then your resistance was cleared and you were going to go up and you were going to hit your break point, and you would have sold there at 243, and I know it's not the top, but you think about how you've cycled that and where price is now, you would have sold 243. So this is like taking a couple trades a year, so at the end of the day, it's not an investment, it's just a trade. And you can do it on whatever time frame suits.
Hey, Sin, I'm not sure if you've got the time to address this, but I know it would be very helpful for me looking at the comments about cotton candy. I struggled with this kind of early on. When you're speaking about interior, there's probably some others in here that are kind of at the spot that I was at. When you're speaking about interior structure, exterior structure, these kind of concepts are probably things that people have gone back and forth through cotton candy because he is very vague. on a lot of some of these concepts. So if you do have,
Oh, yeah.
I would suggest to kind of refresh people in that space and how you're using those.
Okay, so exterior structure is just basically your highest time frame trend that's in play. So, like, if we take this as once upon a time the highest point of accumulation on the chart, that at one point was your highest time frame trend, and you wouldn't find any interior to that unless price started to break down into this area lower, right? So at that point we didn't have any form of interiors on that time frame. So it then became that. Once again, you're not going to have an interior unless it breaks down into here. And it has to break down in there and create an accumulation. So it becomes, and then it becomes that, and then it becomes that. Because so far it hasn't broken downwards from the trend. Like, think of it as parabola, like one way or the other. So like if you had like everyone thinks of parabola in a euphoric sense, right? Like you go, like prices trending up. Okay, like this would be parabola. Someone says it. Someone say it. I can't say it. This would be a parabolic move in price. It's just trending up, right? But all of these come from that. So when these start to break, that's where it wants to go. Like it wants to come through all of this to get back to this. So that's probably where it can get a little bit vague. Eventually, when a parabola, however you say it, starts to break, its idea is to go back to the external. So here we go. We've still got nothing breaking down internally. We've still got nothing breaking down. We've still got nothing breaking down internally. Still nothing breaking down internally. Yeah, so you skip that because body's on it. You're there. Still got nothing breaking down, like internally, and then we're there. Now we do, right? So this is your first break, completely clear. That's your first interior trend. Okay, there to there. You only get, in this case, one before it takes off. This close, this close over the interior. And I've found that often these higher time frame trends, you end up getting into the trade way too late. So what's more important is that you array this interior through time. So if we're on a month, I wouldn't typically array a month to a weekly because it's an uneven amount of weeks in a month. But you would array a month to a daily. So if we drop this to a 1 day chart, and then we look ahead of our pivot point, which is where, so you hover over the trend, you see your pivot point is there. You look for a 1 day candle completely clear, which is this 1 day candle right here. So you take that and you move it there. And then this is your break of trend. And this is your corresponding support. And once this trend breaks, it is a direct attack on the exterior. And this is your entry. And then, as you can see, say goodbye to the exterior trend. It's gone. So that's the way you're meant to do it. And yeah, I think when I first watched it, I was a little bit like, what the fuck's the point of this? Like, if I'm waiting for a monthly candle to close, I'm already 20% above, that trend line or whatever. In some cases, sometimes the monthly closes just over it, But yeah, if you take your interiors and you array them to lower time frames without changing the pivot point, the key thing is that the origin of the trend is a monthly, and the break happens on a daily. It's like a precursor. It's like seeing the future before it happens. And at that point, you know that you could have entered in this box for a monthly for a monthly trade. You're entering in here for that. Does that answer it?
Yeah, certainly it's cleaned up. I think people would, a lot of people in here that are earlier on the journey would be grateful for that little tidbit right there for sure. Thank you.
Yeah, it's a definitely a more advanced sort of concept. Yeah, and key takeaways, I guess, is that when you array things through time, they must be even chunks, because you're using the highs and the lows of a candle in a time frame within a time frame. So if those are not divisible by the time frame that you're working with, then they're not correct. So you've just got and that's why if you try to take a monthly to a weekly, it's not going to be right. If you can pretty much take anything to a daily, and then once you're within a daily, you could take it to like a 12-hour. Once you're in a 12-hour though, like 8 hours isn't going to evenly divide into 12. So you might go to 12 and then you might go to 4, and then for 4 to 1, 1 to 15, 15 to 5, like that would work. But just make sure whenever you're arraying a trend, I mean, to be honest, if you're trading on 3x, who gives a shit? It doesn't really matter. But like this is the stuff that you learn when you're taking 40x trades, 100x trades. This is the reason it's so anal and specific is because these concepts are designed around using irresponsible leverage that you shouldn't use unless you get really good at this. That's the disclaimer, by the way. Don't fucking do it. Laughing face. What's this? And when you switch to a lower time frame move, the base and reach points and I never understand what you're saying. You're very intellectual. Array points. When you switch to a lower time frame, yeah, you never move the base. You never move this or this. This stays on the higher time frame. When you arraign a trend to a lower time frame, it's only the pivot point, that second point that you move. So use rays. Don't use trend lines, because rays can extend into the future, and this is all about predicting the future. So use a ray, not a trend line. I don't know why trend lines even exist on TradingView. You should use rays. And then, yeah, never move that. Just move that. Tin hat conspiracy. Trend lines exist to fuck you up. Use rays. Someone's tapping. No worries. Thank you. Not much more to teach you. You're an expert now. Draw some lines. Long some supports. Take your profits at resistances. Use your fibs for confirmation. Trade with trend. And just like, I think a lot of people probably in this group or in the bigger discords, it's just confidence, and that just comes from back testing and journaling and developing a strategy that gives you that edge, and then just testing, and yeah, and then there's other emotional stuff I suppose that comes with it, like when you move from $50 risk on a trade to 500 to 5,000, like it starts to change, and then then you take $50,000 risk on a trade and you wet yourself, you know. But like, it's just over time, things just change. Yeah, I don't really mind when things are slow. There's not much going on, and if I've reached my targets, then I can do more live streams. I mean, a lot of it is probably just going over the same stuff. I guess the one thing to take away from this is it's actually quite simple. Like, I mean, it's complex, but it's simple. There's not that much to it. There either just is a trade or there isn't a trade. You know, and if you practice the basic concepts of it, yes, repetition does help. Practice. Can do the TA on Jump. Need a paid version. Oh, okay. So you mean, can you do this kind of thing outside of TradingView? Don't know. I mean, if you're serious about trading, TradingView is it is effectively an investment. Like, it's a tool. Like, you just, yeah. A builder needs a hammer. No, a trader needs TradingView. Sure. I'll win. Yeah. I think diagonals. So horizontals are there to break diagonals, and diagonals are there to push down through horizontals. It's all just support and resistance. But if you think of it this way, a horizontal is not designed to actually break another horizontal. A horizontal is designed to try and keep price stuck in a moment for long enough that it can go sideways through time, because the only thing that can break a data point or like a diagonal is time, or just extreme volume that just comes out of nowhere effectively. I mean, they can say bye-bye to a lot of things, but even that can generally be explained. Like when we hit a monthly level, it really didn't matter if you had a lower time frame trend line in place. When we hit that monthly level, you were going to get that just fast move up. Those lower time frame trend lines would cause some little blip delays, but it was just going to go. So yeah, you sort of trend lines, when you really start to look at them, are spooky little things where you will find that price often interacts with a trend line at an exact moment in time where it can touch both at the same moment. It's and the purpose of that trend line is to suppress price. The purpose of the horizontal is to keep price flat and sideways to then move through that trend line. And it might be to break out to the upside, it might be to break down to the downside, but they have a direct relationship and effect on each other. So they are both important if you're trying to figure out where price is going. If you believe one is, more significant than the other, it's just probably just lack of understanding. And I mean, when I first started trading, I didn't understand what the fucking trend line was. I just knew that price hit it sometimes and stopped. It either rejected off it or it stayed at it. Later in life, I realized what all that is. Array your trends from high time frame below time frame. Identify confluence with fibs, long at support, TP at resistance. Yes, you did. That is perfect. That will lead to success. Hey, just joined. Why is the exterior trend drawn through the second wick Oh, the green candle, and not the first one. Okay, so it's to do with how trends array through time. So they always start first to first, and they can only be moved to a candle where the body opens and closes. In this case, it has to be accumulation because it's a resistance trend. So to be broken, it must be there, and it must be opening above trend and closing in accumulation above trend. So if you move that through time, it goes from that one to that one, 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 to that one. And of course, so far it's just every candle, right? But when you start to get into this, that's above it, that's on it. So you skip that candle. And that's the key point to an accurate trend line, is that that candle changes the way you adapt a trend. So because it's on it, and the wick can be on it, just to be clear, but the body can't be on it in any way. So then it goes to that one, which means you skip this one because the body is on it. But that one is clear of it. So then you skip it to that one. And then you can, you can't do this because the wick is higher, right? So that is a trend in a different way, but it's not relevant for figuring out a breakout. But that is completely free and clear of it. The next one that's completely free and clear of it. So that's your interior trend to the downside. And then this is the trend we array to the daily. So we take that, we switch to the daily. We look, we do not move the anchor point. We look at the pivot point. We only look ahead in time because charts don't move backwards, they move forwards. And we look at that candle being completely clear of trend on a daily. We move it to there. Okay, that's now our daily break of monthly resistance, interior. This daily candle signifies the beginning of the break. This support block down here is your entry, and you're gone. So that's how that works. Okay. Yep, you're welcome. At what price do you draw the line in the sand? 155.1. Breaking that's pretty bad. You're welcome. Correct. Yep. It's only hard closed when the candle is completely outside of it. Yeah. So yeah, candle has to close completely outside of it. So if you look at that monthly, that's how we got to that. And then of course this closed completely under that, which is how we got to that, which makes this candle irrelevant on a monthly time frame. This candle is also irrelevant on a monthly time frame. That candle is the break of your monthly, like see your monthly, that one. That candle's the break. That's the retest. The probability of us dumping when that month closed was huge because nothing in here is the retest of that monthly trend. It had to be after this candle closed, which is that. Someone could post a Marty GIF. You know, we knew this retest was going to happen after that monthly close because it was the first monthly candle that actually broke the monthly trend. Hey guys, we knew this was going to happen. Actually, you don't know what's going to happen. It could go up for months and then come down for a retest, which would have been even more vicious. Array trends cannot touch bodies, only wicks. Yes, correct. And has to be completed clear. Yep, correct. Got to be clear of the trend and in the right direction. Yep. Practice, 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 practice. Just turn on replay tool. It's a great thing. And then you practice it in like if you put all the lines back on the chart, there's typically 5 stages of distribution. So 1, 2, 3, 4, 5, and that was and then accumulation started. That was our distribution, 5 stages, and then this is accumulation, signified by the first high time frame structural break, first long fib trade. This is all short fib trades coming down here. This is long fib trades, and then up we go. Why start at 1 month high time frame? So the best thing you can do is start on the highest time frame where you've got 2 candles. Like that's ideal, which is because you're trying to find the most powerful move or the highest time frame move, because the higher the time frame, the stronger and the less relevant all the lower time frame stuff is within it. Like a 5-minute break level or resistance level that exists prior to a 1 month level is not going to stop a bounce from a 1 month level, which is what you saw in that really big fast move up we had in this area here. Like going back to that, you have a 1 month support there, and we didn't have anything. Like at the time that this candle touched down here, it wasn't yellow, it was blue. And to create 1 month resistance, you have to get below that level there, 120. So below 120, you create 1 month resistance. Above 120, all you had was 1 month support. So we had weekly resistance, at this point in time. When price is coming down like this, you had formed a weekly break in there, and you had formed a weekly break and resistance in there. But the thing is, it's weekly. So this is a much bigger fish. So when that candle touched monthly, it just exploded through all of this because they can't stop it. Like it's low time frame events trying to stop high time frame events. It doesn't work like that. So it's sort of why you always try to find your highest time frame events that are in play, because they're the one thing that's going to send your low time frame backwards or forwards really fast, whatever. Why is that bar chosen for the support box on the monthly and not any other? So if we go back to 1 month, so many intelligent questions today. Accumulation, distribution, accumulation. So effectively, it's because that is the distribution before the accumulation. Prior to that, it was that. Prior to that, it was that. And prior to that, it was that. Is that correct? No, that's resistance. That created resistance. Where is it? So it was there initially. So distribution, accumulation. I mean, like that you sort of see as a fib trade. The difference with support versus fib trades is support starts from wicks. Fib trades start from bodies. But that was a formation of support, and it ran into this, which is a formation of resistance. So if we do that. So at the time when we were going through here, that was your support to long and that was your resistance to TP or short, whichever. And you're just bouncing between those numbers effectively. In here was where you created your support. So this sort of said that support is now growing, which is that there, but it got invalidated pretty quickly. Like that support was lost when that wick went through it. And when that wick went through it, it went back to the original support to try and take the price back up again. So this gave it a shot, didn't work, it failed, and it went back to the bottom one. The bottom one became support again, and then that became support, and that held. And it was that monthly that basically, it was actually this candle here. So this push up here invalidated that resistance. So from that point onwards, there wasn't any monthly time frame resistance left on the chart. So once you break resistance down and it's gone, you will then get a retracement. And so typically the retracement will be to some form of support level. At a higher time frame, that had become support from all that. So you were going to get a retracement, you know, below 200s from when you broke 260. So that was sort of, that was a given. It kind of had to go below there. And then, you know, it obviously went down, it found that. It actually didn't find that, I don't think. Technically it found that. Yeah, so it went down, it found that as support initially, and then that didn't really hold, and then it found that, and that sent it to the moon. So could there be a 3-month support resistance? Yeah, there could be. Let's see. No. Broken. So that was the break of your 3-month there. And so it got broken by that candle. And then that got broken by that candle. So there isn't too much going on. I mean, when this closes, if this closes down, then no surprise, all-time high becomes resistance. All-time high is generally always going to be resistance. We have a 3-month uptrend. Yeah. See, it's on the 3-month uptrend. Can't break it. Next candle could, if it opens there. So fingers crossed. What you'd see is, I mean, that's another month away, but like if the next candle opens below that trend line, whatever that next candle is, it needs to be an accumulation candle to not invalidate the 3-month or not break the 3-month trend. If the 3-month candle that comes after this 3-month candle closes is a distribution candle, then yeah, save us, because that's the exterior. It'll be a great short. And just to reiterate, that's why this stuff is not an investment. That's why you trade it. Because you look at that on a 3-month scale. If it breaks that, it's like this. When this thing structurally broke, that it's no different to what we were looking at. I mean, it's all fractal, right? So I showed you that before on a 1-month chart, but when we broke that there, 141 was going to be 68. Yep. So it always pays to start with the highest time frame, but yeah, you might find that sometimes it's just not relevant. Just like, I mean, that was your break. I mean, there is some positives to really, really like high time frame views, and like you look at that was your trend, that was your break, that's your first target. So if you just have large amounts of capital and you trade on 3-month time frames, you were just doing that. $32. Where did that break? $21 to 136. So so there is some positives. And because it's already been used like that there, statistically it's probably not going to stop there. It's already been hit. So that means it's going to go for the break level, which is there. So from a 3-month perspective, you were trading from 21 to 174. If you can find a 3-month trade or a trend that is about to break, and insert disclaimer here, you have done all the practice and you're very confident and you know what you're doing, then you're going to make some money. But it's going to take time to play out. Do you mind to array a trend on SUI, for example? This thing. Yeah. What do we want, an uptrend or a downtrend? We've got an uptrend. That's not closed yet, so you can't really do much with that. Go 1 month. That closed below it. It's on it. I mean, you can just see like this was your SUI trade. Like, hindsight's a wonderful thing, but you got to. The great thing about Replay Tool is that you can replay to a point. You can put these things on the chart, and then you can actually predict. And then you got to get in the mindset of not looking at what has been, but looking at what could be. See that there? This was creating support. You didn't have this trend yet. Didn't exist. You had this downtrend. And this candle broke that level. So that resistance is gone. Any resistance that was in there on any time frame is gone because it broke there. Because of that, it's going to find support. And they always talk about the flipping of support to resistance and that kind of stuff. So yes, that's exactly what happened. It flipped that downtrend into support, and then the price took off. And there's no way really to know where that price will stop. But once you get your first distribution candle, you can then start to track it. And so far, we're looking to open in 8 days the next one below there. So yeah, SUI would have been a bit of a tricky one. You could have taken that, and this was definitely going to go there. it had a pretty good chance of going there. Didn't make it there, didn't make it there. So yeah, that's so if you were trying to find the early breakout in that move there, so you've got monthly, so go daily. Move forward to that, and you long that. So that's your $1. So you long that support after that candle closes. So that's your entry. You're $1.02, and then you go back out to your monthly because you're working on a monthly range break, and I don't know, you entered, the box just disappears within the candle. You entered here, and at that particular time you had resistance. So, you know, you're basically heading into that zone there. So it's not necessarily, like this first move is not necessarily confirmed that you're going to go all the way up to here, because if we take that back to the daily, the really, really safe part of that move is just that. So basically $1.02 to $1.15 is really, really safe because you were heading into that resistance, which was real at the time. And it fell over, and so it just kept going up. When you say trade with trend, what time frame are you looking for? Yeah, I mean 1 hour is fine. Any time frame really. Like it's just you want to trade within the time frame of the trend. So if you go to a 1 hour and look for a 1 hour trend, so that's a very obvious 1 hour trend. That was a very obvious 1 hour trend. So if we go there to there, that was a 1 hour trend in that particular given moment. And price was going down, and it broke almost straight away on that candle. So you find your 1 hour resistance. That's below the break, so it doesn't matter. That's above, and it tapped it, you know, and then that's above. So basically, on the closure of this candle, that resistance was already tested. That resistance wasn't. You close that candle and you take a scalp from there to there, whatever that is. The thing is, like a lot of this low time frame stuff, the percentages won't be huge, like 1.87% move. You know, so but yeah, do a couple of those a day. What you want is you want break of bigger downtrends. So you could take that, move it to there because it does. And then see, you want this type of stuff. See these drops, and then that moves to there. Okay. So when this gets broken, the problem is it's breaking into this resistance. So this is not, you don't long that break because it's into. Resistance was created by that yellow candle and that blue one going below that yellow. So you don't take that. Instead, it will reject. You could short it. I mean, it's going to go down. So you do that. Now you're getting, you know, a deeper trend, and now you can array. So now you've got an interior, and ideally, you want to be taking interiors. So there you go. So this candle breaks the interior, and it targets the resistance up here. So, and then your, if we put, that's it there. So we've had an interior, we've broken an interior. We've created a second exterior. So this is the first time our trends move from there to there. So you can see stuff starts to change at that point. And you've also created that as an uptrend. So now you're going to start trading with trend long rather than short. And the next key level is the break of that resistance. Wrong tool, but you get it, the break of that resistance. And as you can see, when resistance breaks, it's always going to retrace. So you don't chase, you don't enter the trade. When you break resistance, you enter the trade when it retraces from the break of resistance. And that's where you've got to find your support. So support is there. And if it breaks below that level, you're screwed. Well, you're not screwed, it's just going to go down. So, yeah, and then it comes down, finds support, goes up. If you want confirmation, you wait for it to find support, you wait for it to escape support, and then when it retests support, you long there, and then you target the next resistance level, which is here. That's your long in there. So, mate. So when you say you trade with trend, so yeah, so to answer your question, you had an interior formed, an interior got broken. It gave you a upwards array of your exterior, so your trend is starting to change at that point. I mean, moving averages? Moving? How do you get moving averages on the screen? Fuck those. Any idea? Moving average. Simple. I like simple. How do you get 2? That's only 1. Okay. Indicators. That looks good. Let's play with that. Yeah, so moving averages are always going to lag trend breaks. So like, see how you had your crossover about there? Because moving averages are just trends. They're just smoothed out average trends. So you had that crossover sort of about there, maybe in there somewhere. Whereas in actual fact, your trend changed down here. So, well, in actual fact, your trend was going to change here, like, because that's when your interior broke to an exterior. But that tells you it's going to change, and then it formed and changed and found support and started moving up. So it's kind of like, a lot of people trade MAs, but they're a smoothed average, so they're lagging. So yeah, I guess they're just a good, quick way of looking at something. So when you say trade, yep. So yeah, so I mean, if you're going to trade, say, a 1 hour uptrend, you just want to make sure you've got, like, where your 4 hour level is, for an example, because you could 1 hour long straight up into a 4 hour rejection. That'll get you. That'll be real fun. Don't do that. Yeah, I think surprisingly, ETH is actually looking good. Not that people probably want to hear that, but ETH, I think just they've fudded it to shit, and they've probably bought what they want to buy, and next thing you'll see will be some kind of boom, probably.
Ese es Sui. Ahorita cambiaron. No, todo
yeah,
en Solana. Ahorita están en Sui.
Yeah, that was Sui on the screen.
Después platicamos. El resto son traders.
If the 4 hour was downtrend, would that give you doubt? Yeah, sorta. It depends. It depends where the support and resistance is. So, if you look at a 4 hour, I mean, the 4 hours is a beautiful long. Just looking at that, like that broke down here. Most things 4 hour have changed. Now, Sol's changed. Like, it's not as prolific as that, but so that was your 4 hour. That was your I'm going to fuck you if you try to take that long, because you just boom, long into resistance. It's a great way to lose money. Instead, you array your trend. That's on it. That breaks it. That's also into resistance. So it's just trying to get you. You know, crafty little buggers, aren't they? But you array your trend. Okay. Then you get an interior. Then you break an interior. You long. To there. This candle, long. There, TP. When it breaks resistance, flips it, long. It broke that all the way to there. So it broke that. So now we're here. Long. Broke that. Broke that. In fact, it's broken all of that. So you'd still be longing. And practically up here is higher time frame resistance. That big group there is some form of higher time frame resistance. It's been tapped there, not tapped there. That would be. These are the kind of ones that can catch you. See how the price is rejected there. On this time frame, just looking purely at this, you would think that that's a safe place to TP, but it's actually a bigger time frame in that. About 3 years. Can you make an inverse example for dupe? Drum roll, please. Can you make an inverse? It looks toppy to me. Would appreciate an arrayed example. Where's dupe? Yeah. Dupe's kind of got the same problem Sol has, which is that's high time frame resistance. Like, but it's not as bad, considering that when we first hit this level, that was high time frame resistance. So at least we're going up. But that's that. But this is kind of on that same path, really. So let's go 1 day. We have a day. Do we have a week? Ooh, we have a week. Much nicer. We can play with a week. Do we have a month? Okay. Fun. 1, 2, 3 is our monthly. We have a monthly interior. No, we don't. So we'll go for daily. Do we have a daily ahead of the pivot point? Yes, we do. There. Can we now take a daily? So this trend is a monthly trend. It's an all-time high trend. If it breaks that, your target is all-time high. Now we take this. That's our downtrend. So you can see that candle. Woof. Like that's where those are the types of trades that you're trying to find. Yeah, that's been and done now though, so that's fine. Where are we at now? So we're there. Touching the corner. Are we touching the corner? Ooh. Oh God, place your bets. No, we're not. All right, so we go to the top of that candle. And yes, you've got to be that anal. If you're not, you'll get it wrong. Okay, so that's our new downtrend, and you can see reject, like that's holding it down. And then that became next. Got broken by that. That goes there. That doesn't work, right? So basically, you now start again from this point. This trend here is still relevant for when it gets broken, but you're now here. So there, broken there. And really it's got to get over that suppression trend. That's probably your biggest issue. But you know, like you get that break and then it'll hit that trend. That trend is an older, higher time frame than this trend. So when this trend breaks, it's going to go there until eventually it gets through there. So like from a long perspective, you could long the close of 85 cents up to $1 again. That becomes your next trend. Then that. And then we don't have anything yet for the next 2 hours. But in 2 hours' time, you'll probably have that. And it depends where this closes. What you want is you want that to go up a bit before it closes, but it's got this as its problem. And if it manages to get up into there and then opens the next candle in there, it'll target that higher time frame trend again. So I wouldn't call it toppy, but I'd say it's got some challenges. What it will do if it gets through there is it will have an explosive move to the upside. And it's got, so if we look at it hasn't invalidated that. Has invalidated that. So you want to make sure it doesn't get below 63 cents, 63 something, because then it's back into that. And then, of course, if it goes below there, it's in reverse price discovery. So, yeah, at this stage, the best thing if you're looking to long this is going to be for a slight push up, so it can open the next candle above that trend, and then you could start arraying that trend once it gets up above that trend. Yeah, so there isn't really a long on that at this stage, but yeah, above there, or better yet, the break of that one, the break of that older exterior. What have you got there? Yeah, so what are you on? You're on 1 hour. Let's see. Yeah, so 1 hour support is all the way down here. It's the start of it, and then there. And then that would be a slightly lower time frame again, but like get rid of all this. Someone's got some cool music playing. So this trend is what, there to there, there to there to there to there. There to there. That's your there. Yeah, that was your breakdown. But again, that broke down into that support. So that was not really a decent short. This is a much more upwards move. So there. Yeah. Yeah, there's probably going to be a short. If that closes. It breaks that trend, or those trends, it'll continue. Closing on the other side of two really tight trends like that is what leads to, fast dumps. Every trend you close, particularly if they're really, really tight and they get closed in the same candle, creates a big fall. So there's a really big fall there. Like that'll be one, two. Yeah. 1, 2. Yeah, that kind of thing. You got two trends that come through here. Big dump. And support there. Yeah, so writing or arrays are like best thing I suppose is you start on the highest time frame, but sometimes when you start on the highest time frame it just becomes irrelevant because there'll be no connection. Like say monthly, it's there to there to start with, then there, then there. Okay. But you've got no internal of that. So really that's just a pure monthly trend. So you then have to take it to something smaller. So like if you take it to a 1 day, and you can only move ahead and you can only move to candles that fully open and close, in this case above, and there must be accumulation. So it's not this candle that's on the line, it's this one, because the body, wick doesn't matter, body fully above. So, and it's the first one forward, and it's forward of the pivot point of the higher time frame. You don't move the anchor. So then you go to there. That's now it only requires one daily candle above that monthly trend to target a monthly resistance level. That's what that means. And then you start your next array, and it's going to be the next wick to wick of that pivot point. They must attach, and it goes to the next wick of accumulation, and that becomes your next one. And then your next array is that one. And this is where trend tried to change. Started there. So it becomes that. then it failed, becomes that. But now you've got those two tightly placed trends. Once it closes over those, you've broken two, not one. So this candle here broke one. This candle here breaks the next one. These two are now basically designed to power a reversal, and that's sort of what's happening through here. It's you could actively take a long on that, and you could target this exterior. Well, it's actually just another interior, but it's an exterior of those interiors. You could target those, but the problem is that it can move sideways, so you might not win. It's not necessarily going to go up. You know, it could do. Oh, hello. Could do this. Could even do this, and then hit it there, and then your long is at a loss. You know, so. But typically, if you've got multiple arrays like that and you're starting to move upwards, then that'll be the same time when your MA is starting to cross. You know, when you get a little bit further over here. But so yeah, that's how you array that and that signify the trend is starting to reverse. So in which case you look to long support. You don't long the candle break, you long the support that's under the candle break. So that is that candle. And you basically target your first resistance, which is here on that time frame. Make sense? Yes. Thought that might. Yeah. And so once you break over this trend, like this one, well, as you can see, it starts to go up because every one of these trend breaks is effectively the entire thing trying to reverse, but at a higher level because it's spent more time. So if you break a 5-minute trend and then you break another 5-minute trend and you break another 5-minute trend, you've broken a 15-minute trend to some degree. If you break another 15-minute and another 15-minute, another 15-minute, you've broken an hour. And so effectively it's just getting more and more. You know, the more time it goes through breaking trends, the higher the time frame is that's escalating. Yeah, I think someone recorded it. Just incidentally too, trends are a form of resistance. So if you were to take a trade off the support down here, you probably should TP when you hit that. It is a form of resistance, and it was created back here. So that was not created by that data point. It was created by that data point. So yeah, aiming at that top box, it would have been a much safer idea to TP there because the job of that trend is to suppress the price. Once you closed over that trend down here, then you would look for your support, which is slightly different at this point. So when this trend break happens here, your actual support is that. And you'll notice that zoom in here, you'll see that wick hits that support, and goes. That's it. So this first trade, really, you should have TP'd at trend, or at least TP'd some at trend, and set your stop loss to entry or break even, and then you would have got stopped out, and then you would have entered on this candle, and you would have used, well, sorry, that candle would be a trigger. You would have entered on the revisit of that support, and then you would have got that top target. So there's actually 2 trades in there, not 1. Creating my inner retard. I like inner retards. Yep, you're welcome, Mr. Krabs. Nice. All right. Any more questions? Yeah. It's actually quite hard to consciously teach this stuff. It's much easier to subconsciously do it. Sleep. It will all be clearer in the morning. Nice. So 5 minutes, last questions. Don't make them hard. We'll call it a day. You start your YouTube channel. I can earn more money trading. Actually, I don't know what. I don't know what YouTubers earn. Actually, to be honest, no idea.
Hola. Oh, baby. Baby, servime agua, please. I'm dying here. Estoy perdiendo algo, but I want to know it. Hola.
Cool. Job done. Calling it a day. Nice. Peace out. All right. Good night, good morning, good evening, whatever it might be, wherever you are. We'll do this again some other time, maybe. See you all.